best lithium miners on the ASX have put on between 60 and 97% over the last month. We're going to have a look at the top 6 lithium miners on the ASX to understand how they've moved in the last month and led the market higher. This is Final Market Points, where we're connecting the leading market themes and the top performing companies for better trading. If you like the video to support the channel, click subscribe for updates and comment below to let us know the lithium miners you're trading. Now, when having a look at lithium miners on the ASX, we start off with the old Orocobre, now Allkem Limited. That's Orocobre and Galaxy merged together. And we can see the patterns that they've put through, and they are a good example of how lithium miners have traded on the ASX. We do see volatility contraction patterns and congestion patterns that do really signal what the whole market or the top lithium miners on the ASX have done. We've had a look in detail at how they broke out together throughout this May, June, July period, and you can click on the link in the description on screen to have a look at how they move over a 2-month period, one after another, just shooting out of their basing patterns. But we can see the good strong movement throughout December and January throughout the AKE share price gain from $9 through to $11.50, almost getting to $12 last week. If we have a look at the lithium price, that does tell a good story and helps relay or convey that rally over that December period. It doesn't trade as much as gold and copper and other industrial metals, but the moving averages here of the 200, 50 and then 10-day moving average show us what's been happening in the price rise between December and where we are in January 2022. We can see that real fast uptick, bringing it out for 2 years to have an understanding, pulling that lens back to see that movement, 30,000, huge movements, big gains. So really ramping that up, good, strong, steady movement. And that really helps being the undertow. It's pushing on the lithium miners. But we're going to jump in now and have a look at the top 6. We're going to start off for the 6 best performers, LPI. Now, all of these companies we've looked at before because you'll see the trend has just continued to push them on higher. Now, LPI, Lithium Power International, 61% over the month, put on a solid 33% in the last week, and that's on top of the movements over the quarter, which is about flat for the month, 69%, but 106% for the year. Do know that pullback happened throughout November, and they weren't alone because we're going to see a lot of the other charts showing this congestion period here. But what we do like to see is this basing pattern coming in around that 200-day moving average, rounding up and then breaking over the overhead resistance with good strong volume spikes and then continuing on up. Does have a throwback almost to the breakout point, previous high, before turning the corner with that commodity price that we saw in the lithium commodity itself, 38% for the month, and shooting on up for that rally. That's LPI coming in at number 6 on the month. Number 5, we've got Critical Resources. CRR is their ticker. 48% for the week. See that massive movement. We're looking at this movement here coming from around 4 cents to getting up to 9 cents in the last trading session. Huge volume movements in the last week because it's really turned the corner, 3.5, 4 cents, and then quickly up the elevator, bang, up it goes. Good, solid movement. CRR's put that on 76% for the month, 112% for the quarter, and 136% for the year. Zoom out for 2 years and you can see there's no share price data here, so that's the reverse IPO coming on the boards here. That good strong movement. We've got 1, 2, 3 rallies and then bang, bursting out, huge movement to where it is today. That's got them in at number 5, and we progress on up to number 4, GL1 Globallithium. Again, we're seeing this recent listing coming back into the markets. 1, 2, 3, and then a bang, explosive movement. Looks just like CRR. Bring that chart back to have a look at that overlay. Similar movement, CRR, and then GL1. We're going to have to type that in to get that. So you're going to see 1, 2, 3 movements, and then bang, explosive rally. Doesn't overlay exactly in the time frames, but it is telling us that it's an inkling of what the industry is doing. And that's why in shares in play, we're looking at this thematic as a whole. We're looking not just at the top stocks, but how the themes are pushing them. And we do see this is consistently happening. We've got these movements. So we'll bring that CRR chart across in the same time frames. And we're seeing that sort of sawtooth pattern before that explosive movement in December and January. They're the best lithium miners on the market at the moment. So GL1 coming at number 4, Globallithium. As we see it move here from the 3.5 to 9 cents, this is where we look at something called a high and tight flag. On screen is a link to the video that we've done as a tutorial in that. Highly reliable pattern for massive explosive movements. When we see a rapid move like this, we're looking for 100% gain in a short amount of time. We're definitely getting that, moving from 4 cents up towards 9.5 cents. When we get a 100% rally, and then we have a congestion in this top half, preferably top third of this recent rally, that's called the flagpole. When we see that congestion, we want to see it break out with volume as well. We'll pull up some other examples that we've had previously, but this is a common pattern and really good for small mid-cap miners, because when we have a tailwind of the stocks in the same theme or commodity running, like we have here, we found that it doubles the likelihood of hitting the profit target on the high and tight flag. So if it does congest here and then break out, we want a pocket pivot, another pattern that we've looked at in detail, and you can have a look at the tutorial there of understanding Gil Morales and Chris Kacher's pocket pivot, link in the description below. Have a high and tight flag, have the congestion period, something like we've seen here, and then break out with the pocket pivot, unlike what we saw here where it broke down. But the pocket pivot indicates the buying has happened, it's broken out, and then off it goes into the bolt-up rally. For this case, it'd be putting on at least another 3.5 cents from the breakout point. So if it pulls back, we're looking at getting over 10 cents for that next rally if the high and tight flag is favourable. And importantly, the rest of the thematic, the lithium miners on the ASX, keep charging forward. As we move on into the next one, we're going to have a look at rate number 3. We're going to go QXR. Now, QX Resources put on 39% for the week. Good, strong week. Looks like the other lithium miners that we've seen. QXR, 94% for the month. So you're seeing it coming out of these lows here. A lot of it coming from this short rally that we've seen in the last week, obviously with the percentages showing. 100% for the quarter and 111% for the year. That tells us that it's been the facing pattern, and you can see that from the chart on the left-hand side. But once the traders get in amongst this, you can see the trading really increasing here. The volume showing a much higher turnover than we saw on the left. The volume bars are down the bottom here. And then it's really showing that the volume's depleted, all that selling's depleted here. Much tighter closes, lower selling volumes, much lower interest throughout that Christmas period, and then turns the corner and shoots the lights out. Next we go to ESS. This is Essential Metals. Now, Essential Metals has put on 80% for the week. You can see that candle movement there. We're coming from like the 21 all the way up to 45. Now we're seeing 80% for the week, 96% for the month, 78% for the quarter, and 138%. So this real movement here is in the week and the month, that massive flick. So it's same thing. We have a look at these timescales across the lithium companies. We're going to see they're moving together. We're going to see a good correlation, which we looked at in detail 2 weeks ago. So click on the description below, click on the description to have a look at that correlation report. We're going to see them move and then flick up like we have here. Another candidate for the high and tight flag. So we want to see them congest in the top half, show us that they can maintain that price. Don't get sold down with huge volumes, watching the volumes along here. And that can be an indicator of the trade ahead. Top place here, we've got GT1, Green Technology, 35% for the week, 97% for the month. So if we can get GT1's chart on the left-hand side, thanks to Iris, we'll show that it's a recent IPO. There's nothing here prior to the start of November. So recent IPO, if we look at the likes of William O'Neill and his cancelling methodology, if you're looking at Mark Minervini for VCPs, they also like to highlight they want recent listings on the ASX. New companies coming to the boards, new technology, new innovation, new capital, and they can turn the dime quickly. 40 cents, getting over $1 in about 2 weeks. That shows us the 97% gain in that monthly movement. We also want to see that high and tight flag potential. Didn't quite get one. He didn't pause long enough. But if we can see that pause and consolidation, we have a good list of companies. If one high and tight flag starts breaking, statistically, it's a good chance the other ones will start breaking too. That's where we drill down for looking at buy signals with the pocket pivots and the likes. That's what we use for timing signals on those. Have a look at the next week. On Wednesday, we're going to have a look at the graphite stocks, and then later, Fridays and Saturdays, we'll look at the high velocity stocks. We'll look at the companies that are breaking out with momentum like we're seeing here, but we also identify the high velocity of those that are moving through the base quietly and moving to the upside of the base, up in the ranks of the market, because that's what we look at on the Fridays and Saturdays.